Welcome to Crypto Insider, your go-to source for unraveling the most intriguing stories and mysteries in the world of digital assets. Here, we dive deep into the events and trends that are shaping the future of cryptocurrencies, from headline-grabbing news to the subtle shifts that often go unnoticed. Picture this. You wake up one morning, check your portfolio, and discover that over 1 billion tokens of a popular cryptocurrency have disappeared overnight, gone without a trace. That's not a hypothetical scenario. This is exactly what unfolded in the Shiba Inu ecosystem, one of the most talked-about meme coins in the market. In a single day, the community witnessed a jaw-dropping spike in its token burn rate, up by an astonishing 27,000%. Billions of SHIB tokens were sent to a dead wallet, effectively removed from circulation forever. But here's the twist. Despite this massive reduction in supply, the price of Shiba Inu barely budged. The market seemed almost indifferent to what should have been a major event. So, why didn't this billion-token bonfire spark a price rally? The answer is more complex than it appears at first glance. This is a puzzle that goes beyond simple supply and demand. It's about understanding what truly drives value in the crypto world. Factors like tokenomics, scale, investor psychology, and the broader market context. And it's not just about Shiba Inu. This story is a window into the dynamics of meme coins versus more established cryptocurrencies, and the ongoing debate between hype-driven speculation and genuine value creation. In this episode, we'll break down what a token burn actually is, how the SHIB burn mechanism operates, and why these events capture so much attention in the crypto community. We'll also look at why big percentage changes can sometimes be misleading, and what you really need to know when you see dramatic numbers in crypto headlines. Plus, we'll explore whether these token burns are truly a catalyst for price movement, or if they're just another clever marketing tactic designed to generate buzz and excitement. So, join us as we dive into the paradox of SHIB's token burn, unravel the real forces that move the crypto market, and help you separate the facts from the hype in today's ever-evolving digital asset landscape. So, what exactly is a token burn, and why does it matter in the world of cryptocurrency? In simple terms, a token burn is the permanent removal of cryptocurrency tokens from circulation, making them unusable forever. This is usually done by sending tokens to a special address, called a dead wallet, an account that nobody can access or control, ensuring those tokens are lost for good. Imagine it like shredding rare collectible cards or destroying limited edition items. By removing some from existence, the ones left behind become more unique and potentially more valuable. The main goal of a token burn is to create digital scarcity. By reducing the total supply, the hope is that each remaining token becomes more desirable, and its value could increase over time. Token burns act as a deflationary mechanism, working to counteract inflation by shrinking the available supply of tokens in the market. However, simply reducing supply doesn't automatically mean prices will rise. The other side of the equation is demand. If people aren't interested in buying or using the token, scarcity alone won't help. If there's no real demand or use for the remaining tokens, then making them rare doesn't actually add value. Scarcity is only powerful when people want what's left. In the crypto world, a successful burn needs to be paired with real utility, a strong and active community, and growing adoption of the project. Burning tokens signals a project's commitment to long-term value, but it's just one piece of a much bigger puzzle that includes innovation, trust, and real-world use. Without genuine demand, even the most dramatic token burn won't move the price or benefit investors in the long run. That's why it's crucial for investors to understand both supply and demand, and to look beyond just token burns when evaluating a cryptocurrency's potential. The Shiba Inu ecosystem uses several different methods to burn tokens, each with its own unique approach and impact on the overall supply. Token burning is a process where coins are intentionally removed from circulation, making them inaccessible forever. This is done to create scarcity, which can potentially increase the value of the remaining tokens over time. First, there's the community-driven burn portal. This portal allows anyone in the SHIB community to send their SHIB tokens to a dead wallet. A wallet from which tokens can never be retrieved. In return, users receive a small reward in the form of Ryoshi tokens, which acts as an incentive for participating in the burn process. This method relies on the passion and commitment of the community to voluntarily reduce the supply. Second, Shibarium, SHIB's Layer 2 blockchain solution, introduces an automated burning mechanism. Here, a portion of every transaction fee on the network is converted into SHIB tokens and then sent to the dead wallet, effectively burning them. This means that the more people use Shibarium for transactions, the more SHIB gets burned automatically, tying the burn rate directly to network activity. Third, ecosystem partners, including online merchants, blockchain games, and other businesses, have pledged to burn a percentage of their SHIB-related profits. This commercial integration means that, as SHIB adoption grows in the real world, more tokens are burned through everyday business activities. These three methods, voluntary community burns, automated network burns, and partner-driven burns, work together to steadily reduce the circulating supply of SHIB. Each method brings a different dynamic to the ecosystem, combining grassroots enthusiasm, technical automation, and business adoption. The voluntary portal reflects the collective sentiment and dedication of the SHIB community. Shibarium's automated burns are directly tied to how much the network is actually used, while partner burns depend on the level of SHIB adoption among businesses and consumers. But the effectiveness of each method can vary significantly. Community burns can spike during special events or campaigns, while Shibarium burns fluctuate based on real network traction and transaction volume. As a result, daily burn rates are often volatile and unpredictable, influenced by market sentiment, user activity, and broader crypto trends. Together, these strategies aim to chip away at SHIB's massive supply, gradually reducing the number of tokens in circulation and potentially increasing scarcity over time. But how much impact do these burns really have on the overall supply and price of SHIB? To answer that, let's take a closer look at the numbers and see what the data reveals. A 27,000% spike in SHIB's burn rate sounds huge, but context matters. Often, such spikes are due to the law of small numbers. A single large burn after a quiet day creates a massive percentage jump. SHIB's total supply started at 1 quadrillion tokens. Even burning billions barely dents the pool. It's like removing a drop from an ocean. The overall level doesn't change. That's why these dramatic burn spikes rarely move the price. For real impact, burns would need to consistently remove trillions, not billions. Investors should focus on sustained trends, not flashy one-day numbers. The SHIB community is divided on burns. Believers see every burn as a step towards scarcity and higher value, fueling a powerful narrative and community unity. In meme coins, story and sentiment can drive demand as much as fundamentals. Skeptics argue burns are a distraction. Real value comes from utility and adoption, not token destruction. They point out that SHIB's price is more tied to overall crypto trends than its burn rate. Without real-world use cases, burns are just a psychological boost, not a long-term solution. Ultimately, a robust ecosystem and genuine demand matter more than any burn event. The debate continues, but the math is clear: utility trumps hype. For traders, price action is king. Support and resistance levels matter more than daily burn stats. SHIB's key support zone is around $0.02, a level where buyers have historically stepped in. If SHIB holds this support, it signals strength. If it breaks, selling can accelerate. During market downturns, macro trends overpower internal narratives like burns. True resilience is shown when SHIB holds support in tough markets. Sustainable price growth needs a real catalyst, like a viral app, major partnership, or breakthrough on Shibarium. These events create genuine demand, not just speculative interest. For SHIB, the future depends on adoption and innovation, not just supply reduction. Watch the fundamentals and key price levels. They tell the real story. Burns are interesting, but utility moves markets. Shiba Inu's burn saga highlights the tension between narrative and fundamentals in crypto. The 27,000% spike made headlines, but its price impact was minimal, a lesson in looking past the hype. Massive supply needs massive burns to matter, and broader market trends usually dominate. The real question: can SHIB turn community energy into real adoption and utility? Only projects that balance strong stories with real-world use will thrive long-term. For investors, it's about digging deeper, beyond headlines, into adoption and sustained trends. Thanks for joining Crypto Insider. Keep questioning, keep learning, and look for substance behind the numbers. The crypto world is full of mysteries. Understanding them is the key to navigating wisely.